Hi guys. Today we will analyze EPAM Systems stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. EPAM is a bad performer in the overall market. Also recent evolutions are not positive. The stock has plunged 55% on growing concerns over business disruptions amid the ongoing war between Russia and Ukraine. The short-term trend is positive, but the long-term trend is still negative. There should be more interesting stocks out there. Support levels are around $225 and $198. Strong support level is around $165. Strong resistance levels are around $440 and $485. In the last month the stock has been trading between $169 and $470 range, which is very wide. It is currently trading in the middle of this range. It may be a good idea to wait for a pullback before considering an entry. The stock has an average volume of 1.3 million. This is a good sign as it is always nice to have a liquid stock. Volume is considerably higher in the last couple of days, which is what you like to see during a strong movement up. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model. Discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 27% per year, for last 5 years. We see that the average profit margin of the stock has been around 11% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 128% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for EPAM Systems Company: bad, average, and good. First scenario. EPAM Systems will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be low, 12%. Future profit margin would be low, 11%. Future free cash flow to net income rate would be low, 80%. In this case, the fair value of the stock today would be $90. Second scenario. EPAM Systems will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 14%. Future profit margin would be average, 12%. Future free cash flow to net income rate would be average, 100%. In this case, the fair value of the stock today would be $129. Third scenario. EPAM Systems will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 16%. Future profit margin would be high, 13%. Future free cash flow to net income rate would be high, 120%. In this case, the fair value of the stock today would be $176. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 8.15. Minimum rate of return. I will use 12%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For EPAM Systems, analysts forecast growth rate around 16% per year in next 5 years, and future P/E around 23. Again, I will use 3 different scenarios for EPAM Systems Company: bad, average, and good. First scenario. EPAM Systems will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be low, 12%. Future P/E would be low, 16. In this case, The fair value of the stock today would be $130. Second scenario. EPAM Systems will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 14%. Future PE would be average, 18. In this case, the fair value of the stock today would be $172. Third scenario. EPAM Systems will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 16%. Future PE would be high, 20. In this case, the fair value of the stock today would be $224. As you can see, today the stock is overvalued, $281, even if we expect the company's high performance in future. The fundamentals are good. EPAM gets an excellent profitability rating and it has great financial health. But the stock is currently overpriced. I was lucky to buy the stock at $190, when it was on sale last week. I will buy more if the stock drops below $200 again. Company strengths. EPAM Systems is an American company that specializes in product development, digital platform engineering, and digital product design. One of the world's largest manufacturers of custom software and consulting providers. The geographic presence in different regions, the company provides its services to clients located around the world, primarily in North America, Europe, Asia, and Australia. EPAM has deep expertise in software engineering, which is a key competitive advantage that helps bolster brand recognition and translates to longer-term contracts and predictable fundamentals. The wide product portfolio allows the company to expand the customer base and offsets the losses from one product category with benefits obtained from the other. The company's free cash flow and clean balance sheet provides great potential for future growth. EPAM's return on assets of 14% and return on equity of 19% are amongst the best returns of the industry. Its profit margin of 13% is amongst the best returns of the industry. Based on estimates for the next 5 years, EPAM will show a strong growth in revenue. The revenue will grow by 16 to 18% on average per year. In the coming 5 years, the earning per share will grow by 20 to 25% yearly. Risks. EPAM has 14,000 employees in Ukraine and 18,000 more in Belarus and Russia, who build custom software. The stock has plunged 55% on growing concerns over business disruptions amid the ongoing war between Russia and Ukraine. The company is exposed to macroeconomic, political, and competitive conditions. All three factors could result in lower demand for services, loss of business or key clients, and an inability to hire or retain qualified personnel for projects. Intensifying geopolitical tensions could result in potential delivery disruptions and prevent upward estimate revisions that investors have become accustomed to. The market in which EPAM operates in is highly competitive. Some providers include Accenture, Capgemini, Cognizant, Deloitte, IBM, and other smaller local companies in various geographic markets. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.